Hi, everybody. I'm Bob Marone for Westchester Talk Radio. Welcome once again as we get together with our friends from Hightower Westchester. And today's podcast, insurance. And we are joined this afternoon with Roman Ciosek, the managing partner and director of Hightower Westchester, and Tim Smith, the regional director from AIMCOR Insurance Group. Welcome, gentlemen. Now, Roman and Tim work together to help clients solve various needs when it comes to insurance planning. Today, we will be discussing various types of insurance, such as life insurance for individuals and business owners, long-term care, and general overview of disability insurance. Let's start with Roman. Can you tell us how you incorporate insurance into your practice?
Thanks, Bob, and welcome, Tim, to our first podcast with you. So appreciate you being here.
Thank you.
So as far as our practice, as many of you know and Bob knows, I mean, we're holistic in nature. Our viewpoint is really starting and ending with financial planning, but ultimately, what we're focusing in on are families. We do some work with foundations and endowments. And we really have a primary focus around business owners, which we've seen there's a specific type of need for them, as we all know. And for us, when we start the process, it starts and ends with financial planning. And every single plan, obviously, is customized to people's own individual goals and objectives. And insurance is a real integral part of the overall process, as many of you are involved in that. So it's an important piece to the overall puzzle. And working with Tim and having the right team for us is just very important. We've worked with him for a little bit of time now, but from what we're seeing, and we're very comfortable in his experience and his team with AIMCOR. We're happy to have him on board.
Well, Tim, that brings us to you. Tell us a bit about your practice and how you work with the Hightower Westchester team.
Fantastic. And yeah, personally, I started in the business about 30 years ago now. And have really delved into the world of life insurance, long-term care insurance, disability income insurance, with a real emphasis on estate planning and business planning. As Roman mentioned, Hightower is so skilled in the financial planning world, and to a lot of people, that means investment planning, and growing your assets. But what we like to do is kind of take that second step and talk about protecting those assets and those income streams that they've built so well. Our motto is we protect what you build. So AIMCOR specifically, we've been we're a founding member of AIMCOR Group over 12 years ago. And our business model is to team up with financial advisors like Roman and their firms to help add that protection element to the portfolios that they're building.
Roman, what are some of the types of insurances that you focus on?
Yeah, thanks. So for us, again, we're broad in nature, and we look at this from a really holistic point of view. And as much as we do many different things for many different people, I mean, the things that we're going to talk around today are more around life insurance being term, being permanent. We're going to discuss a little bit about long-term care, which is a very timely and hot topic these days. And we'll also touch a little bit on disability, which is something that we feel is not necessarily spoken all that much. But when we're dealing with business owners, it's something that we need to cover to make sure they have enough of that as well.
Well, those are all important things. And remind me later to talk about buy and sell insurance. Tim, can you give us some insight around permanent life? Let's go there first. Permanent life insurance, the landscape there. Why should someone get it? And what is the importance of it?
Absolutely. I would say there are 3 or 4 primary reasons why someone would be looking at a permanent life insurance plan. And the first is probably the first one that comes to mind for most people. We call it income replacement. If you love somebody, you're married, you have children, your income is important to maintain a lifestyle, that right there is going to be your number one need for life insurance. If you're not here, can you provide the money that's going to be needed for those people that you love to live the lifestyle that you would wanted to provide for them should you have been here? So family planning and income replacement. For people with a little bit larger estates, we get into estate planning. And this is a field, it's in the news right now. You have a certain excludable amount of assets when you have a significant estate. But once you get over a certain point, you face estate taxes, both from the federal government and, depending on your state and New York, state estate taxes, which can be very significant. So the idea is that instead of reducing your estate to pay those estate taxes, why not maybe take a little piece each year to purchase a life insurance policy that will be there to cover those estate taxes when they come due. So estate planning. Along with that is also legacy planning. When you're doing the multi-generational planning, are there ways to structure your assets or maybe use some life insurance to provide not just income, but the transfer of significant wealth down through the generations? And that often includes trust work, so we get the attorneys involved. And then finally, retirement income planning. So permanent life insurance, we would also call that cash value life insurance, right? And there are some very significant tax advantages around permanent life insurance. And not to get too deep into the weeds, but essentially a life policy can work a lot like a Roth IRA. Now, many of Roman's clients have Roth IRAs, but others are excluded from having them because their income is too high. With a life insurance policy, you can fund a plan with after-tax dollars. Those dollars grow tax deferred within the policy. So I'm talking about a whole life, a universal life, a variable life, those permanent plans. And the real advantage is if and when you ever want to take some distributions out of your policy, they come out tax-free if you structure the policy correctly. So it can provide a real advantage for people looking for additional sources of retirement income. And those people typically are the ones who have already maximized their retirement plan at work, like a 401k perhaps.
Wow, that's a great use of that. Continuing with you, Tim, I know Roman's practice works with many business owners. Can you tell us what is important for business owners and what they should be thinking about?
Absolutely. I'm going to say there are two, maybe three primary uses. And the very first is just going to be key person coverage. If you're like most businesses, and we often ask the business owner, which person out there of your 10, 20, 50 employees, which one would be the toughest to lose? And that's usually a fairly easy question for a business owner to answer, right? It's their top sales guy, their operations person, whoever that might be. And often we want to talk to them about key person coverage. So if they lost that most important, let's just say that the salesperson that brings in half or more of all the business, how would that impact the business? And we can write life insurance. The company would be the owner and the beneficiary of a life insurance policy on that person to indemnify the company if something were to happen to that key person. And money to provide the income of lost revenue and or to hire a good replacement, maybe cover their salary for a period of time. So key person coverage is a big one. The next one would be succession planning. So you might have heard the term a buy-sell agreement. So say you and I are in business together, something happens to one of us. Well, without planning, now we're in business with our other partner's wife or their beneficiary. Now, that may not be a bad thing, but that person may not have the same skills, may not be interested in running the business, and would prefer to be bought out, right? So a life insurance plan between two partners or multiple partners can provide the liquidity when it's needed to buy that person out. And when you think about not just the money, but just the interpersonal relationships and the ability to do that are very powerful.
If I can underscore this for you, I mentioned this earlier. I did not have several years ago a buy and sell agreement with an important partner. We hadn't put them together yet. He was the healthiest guy on the team, and he passed before we did them. And it made for a very difficult time. So, folks, if you're listening out there, please heed Tim's words. With that, Roman, with the business owner, I'm sure there are many more parts when assessing insurance needs.
Yeah, no, definitely. I mean, I think to Tim's point, I think the one key word that just defines it all, it's complicated. And every situation is very complex and there's a lot of moving parts. And for us, it's understanding as far as what's underneath the hood. How do we sort of make this work for the overall business, the family dynamic and all? What's happened of late, which we see is with COVID and everything else, is there's sort of a disconnect behind as to what people think their valuations are as far as a company and what it currently is. Certain businesses are clearly valued a lot more, whereas others are, let's just say, unfortunately not. So for us, it's coming in there, assessing, looking at the business model, making sure we start with what the business is worth. And then from that point on, we could ultimately plan and factor in the insurance parts of it as to what ultimately makes sense, right? Because we've seen many different situations where we have two owners, person passes away, their spouse comes into the business and it disrupts the business. And if not, it almost always creates complications. So for us, we start with the end in mind and really build backward from there because we clearly want to have a plan in place or a roadmap. And, the other part of it with the insurance is as much as the focal point is the business, you want to integrate this on a personal level, right? Because there's two pieces here, the business part, and then you ultimately have the personal part, right? And those things should really speak to each other. And we find at times what does occur is that you have a business plan and then you have a personal plan. And then it's just like two separate different silos. Well, they have to be integrated, right? And that's ultimately part of our responsibility is to make sure. And then when business succession comes about, you have younger kids coming into the overall equation, it changes the entire dynamic. So the key here is to review, understand, and modify.
Roman, another big topic for many, and this is personal in many ways, long-term care. What are your thoughts around this?
Yeah, I mean, pivoting into this world, my experience with this and doing insurance for 20 plus years, I still remember back in I think it was 97, 98, I had a cardiologist who was retiring. And he said to me, and I remember, he goes, look, I'm retiring and I'm in my 60s and I want the best policy for my wife and I. And back then, Tim, I know you could attest to this, there were policies, which were these Cadillac policies, which you could literally get unlimited amount of benefits. Well, that ship has sailed years ago. And unfortunately, those insurance companies mispriced a lot of this. But I think we had the foresight to see the importance of this particular type of long-term care part of it. So for us, when we look at the planning process, it's something we weigh heavily and we make sure to have the discussion or conversation. What we find, it's an emotional, I hate using the word sale, but it really is. Unless you've gone through it, unless you have parents, unless you understand exactly as to the moving parts, it's a challenging type of a sale to an individual. But again, it's something as the narrative gets kind of deeper. And the irony of this whole thing, or at least when we are interviewing the retirees, one of their biggest concerns as of now is making sure, one of the top two, is that their kids do not take care of them. In other words, they want to have the flexibility of having their kids have the autonomy and independence to do what they want to do. Because what we're seeing now is a lot of the adults, or at least the parents, taking care of their parents, and now they're taking care of their kids. So that's one of the key concerns. And for us, it's alleviating it. And look, ultimately, it's ensuring that piece of it. So it's an important conversation and one that needs to be had constantly.
Let's move to Tim now. Can you give us your thoughts on long-term care? And also, can you explain the types of policies that are available?
Absolutely. And Roman, you really hit the nail on the head there. I think the less experienced planners look at long-term care as purely a financial question and protecting assets. And what I've learned through the years, it really is more of a emotional type sale. We get the family involved, and people really feel very strongly. And we're really talking about now, baby boomers and aging baby boomers. They're independent people, and they don't want to be a burden not only on their children but on anybody else. So you're right on with that. In terms of covering the risk, it's really evolved. Going back, right about 30 years ago is when the first long-term care policies were rolled out, and there were dozens of companies providing coverage. They didn't exactly get it right in terms of their expectation of how many of those folks would end up on claim, how many people would drop the policies, and even more importantly, the low interest rate environment has really impacted their ability to make money on the reserves that they invest to back up those promises. So those things combined have resulted, and I'm going to say something that probably many listeners have read in the paper or gone through themselves or heard from a neighbor, pretty significant rate increases on these policies through the years. So it kind of gave the industry a black eye, even though it's very needed. And they're not bad people running these companies. It's just that they didn't really price them right. So of all those dozens of carriers, right now there are only a few that are left. Just really a couple of carriers that sell long-term care insurance. But as any industry, the life insurance business is very innovative, and there's a lot of very smart actuaries out there trying to develop a better mousetrap, if you will. So there are two that I would mention. One is traditional life insurance, where you can add a feature, we call it a rider in our business, to cover long-term care. So, I'm 56 years old. I have a life insurance policy in case something happens. I have a couple kids, in college. I have a rider on that policy that says if I needed long-term care, I can access the death benefit, the face amount, before I die. Okay. So for a little bit additional premium, you can purchase that rider right on the life insurance that many people already think it makes sense to own, So that's one way of doing it. The other way is what we call it a hybrid. And it's technically a life insurance policy, but whereas with a traditional life policy, your benefit is limited to that death benefit that you purchased. With the hybrid, you're able to get really a multiple of that amount of insurance. And people generally will take a lump sum of money, maybe $50,000, maybe $100,000, and put it into a policy that says, hey, if I die, it's worth $150,000. But if I ever need long-term care, it might be worth $400,000 or $500,000. So two different kind of twists on using life insurance to cover long-term care. And one of the real benefits of these, they're all guaranteed. They're fully guaranteed. And that gives people a lot of peace of mind that they know that whether they collect on the policy needing long-term care or their beneficiaries ultimately collect, someone is getting a defined, guaranteed sum of money.
Okay, that's an excellent explanation. Well done. Roman, how about disability policies? What are your thoughts?
Yeah, and this again, dealing with business owners, we find ourselves having this discussion constantly, and disability, what we feel is a bit misunderstood. And I know Tim will speak to this a little bit more, but look, we all, if one of us or some of us work for a corporation or a small business or a relatively larger business, we go through this sort of October, November timeframe. We go through our benefits and things like that. We choose short-term disability, long-term disability. Well, I don't think there's a real assessment as to what that may look, right? And as one's income grows, particularly for a mid-sized business owner, you really need to factor in if you have enough. I mean, I tell clients that, look, you insure your health, you insure your car, you have life insurance, but how many of us really look at disability to insuring the most important part, your cash flow, right? And what happens is many of us don't have enough of it or just don't understand as far as how it works. And there's various types of it, whether there's different riders or things of that nature. But again, it's something when we do the planning process, we assess, we make sure you have enough, and then we look at if it makes sense to increase or perhaps decrease or eliminate completely. So, I had a doctor back then where he had a disability policy for years, but he was stopping working. And he's like, well, should I keep continuing with this? So again, it's just having the conversation of, does it make sense? Does it not make sense? Right? Because clearly in the financial planning process, it's something that has to be addressed.
Okay. What about you, Tim? What can you say about the need for disability insurance?
Yeah, I absolutely agree. And you're right, Roman. People are fairly diligent about insuring their important assets. Even if you go out and buy a Rolex watch. People want to put that on their homeowners, and I completely understand it. But you're thinking about paying, a little bit of money to insure something that might have a value of $10, $20, or $30,000. Your most important asset probably isn't an asset at all. It's your ability to get up and go to work every morning. If you're a working person, that is worth more than probably any other asset that you own. And that conversation really should be had. If you think about, 40, 50-year-old person supporting a family that has an accident or a sickness or what have you, and is now disabled and can't work, it's almost worse than if the person passed away because there is no life insurance paying out. There's no income coming in, and there could be significant new expenses because of that disability. So I know it sounds like a little bit of a negative conversation, but it's really just about planning. And we usually tell a little story to people, and we say, hey, listen, let's say you were being interviewed for a job and you got the job offer, and the employer said to you, okay, you can get your salary one of two ways. The first is we're going to pay you $100,000 a year as a salary, and if you get disabled, you get nothing. Or we'll pay you $98,000 a year, and if you get disabled, we're going to continue the $98,000 to your age 65. That difference being, paying a couple thousand a year for disability income protection. And when you look at it that way, it just makes a lot of sense. And one of the advantages is, or one of the objections that we hear is, well, I have that at work. And that may be true, and it might provide some basic benefit for most people. But it's really important to look at, especially for the little bit higher income people. It may not be a very sufficient or significant benefit that they're getting. And to add on that little extra level of protection is really not that costly. So it's worth having the conversation.
Folks, you're listening to or watching Westchester Talk Radio, and the topic today is insurance. We are with our friends at Hightower Westchester. Specifically, we're with Roman Ciosek, the managing partner and director of Hightower Westchester, and Tim Smith. He's the regional director from AIMCOR Insurance Group. Let's go back to Roman and about the issue of insurance and demands. Are you finding a larger demand now for new insurance or reviews of current policies, Roman?
Yeah, I feel that the sort of the narrative has changed somewhat, right? And particularly, not to focus in on COVID, I think people introspectively have just reassessed as far as what they're doing and how they should be doing it. And I think it's a good thing, and it's an important thing because it brings it back to basics and understanding as far as, look, if something happens to me tomorrow, is my family going to be okay, right? And to Tim's point, peace of mind, you can't put a price on that. And I feel that having that conversation around insurance is such an important one. And look, and Tim, you could say this as well. 25, 30 years or even 50 years ago, life expectancies were different, and they're probably going to be different moving forward as well. People are living a lot longer, and the policies need to be reviewed, right? Because rates 20 years ago or 15 years ago were significantly different, as we all know, where they currently are. And some of these policies, unfortunately, are going to implode. So you need to review them. This is not something that you buy, you put into the drawer, and you forget about it for 15, 20 years. It's something that needs to be assessed on a constant basis and reviewed. When we sit down with a prospect, it's something that is a priority for us to make sure we review it. And the only other thing I'll add just really briefly into it is that life changes, circumstances change, and whether people get divorced, they get remarried, or they have children. Again, these are things that need to be looked at when you're factoring in insurance as well. The part around having the correct beneficiary, right? Many of us, again, forget about the policies, and we don't change the beneficiary on the life insurance policy. And what happens is they pass away, and the life insurance policy, the beneficiary on it supersedes anything that's in a will or whatever in a trust. So you have to be careful to make sure that you have the appropriate people as beneficiaries in that as well. So again, it's something to consider, and it's having that team and someone like Tim part of it to have that discussion as well.
Tim, what type of trends do you see in the industry as far as underwriting and the number of companies in the various states?
Yep, thank you. Roman mentioned COVID. And there was an immediate sort of knee-jerk reaction on the insurance company's part. As you can imagine, what kind of effect that would ultimately have on claims. I think the structure, the size of the industry, the reinsurance agreements that are out there, companies have not had much of a negative response. So underwriting did tighten up a little bit initially. We see those being a little bit more relaxed now. So that's good news. Every state, as you may or may not know, it's insurance isn't regulated at a federal level in terms of product approvals and things like that. So New York State has a very I don't know the word, rigorous Department of Insurance, and it's not easy to get products approved, and they do put a lot of regulations on the companies. The idea is to protect a consumer, but that isn't always the end result. And there's been a few things over the past couple of years. A cybersecurity regulation that's very, very stringent is one. A reserving requirement is another one that they brought in a couple years ago. And those combined, unfortunately, have forced a couple, more than a couple carriers to exit the state of New York. And we're talking about, household name companies, like Principal Life and John Hancock and Equitable. I mean, insurance companies that have been around hundreds of years protecting millions of Americans are finding it difficult to do business in the state of New York. So, and I don't mean that as a big negative or scare tactic. There's still plenty of carriers available that we can go to, but that is a little bit of a disturbing trend that we've seen.
Before I say thank you and goodbye, final thoughts. Let's start with Roman.
Yeah. Well, first of all, thanks again, Bob, for having us here. Tim, thank you for joining, and looking forward to working with the agency further out. I think it's just like anything. It's having the right team and having the right advisor to address these specific concerns, and really having the discussion. And the one thing I tell people is that in the ideal world, you want to have everybody sitting at the table, right? You want to have your advisor, the family. You want to have even kids understanding sort of what we're doing and why we're doing it, right? Because we've had situations where somebody inherits a significant amount of money. They have no idea. They don't understand it. But for us, it's the educational piece. It's an important part of the overall process, and making sure everybody understands their part, their role as to what needs to get done. And again, I think it's having, whether it's somebody like an advisor quarterback the process to become that CFO, or whether it's somebody else in the overall team, it's making sure everybody speaks to each other. We're not doing things in a silo. Everybody needs to understand what's going on and why it's happening.
Tim?
Yeah, and I agree with that, Roman. And the one thing I would add is you talked a little bit about reviewing in-force life insurance. That is critically important. And you're right. I recently had a family friend pass away, and the beneficiary of the life insurance was his ex-wife. And fortunately, they're good people. She's doing the right thing. It was intended for the children. And that's just a quick personal aside, but reviewing those things could be critically important. Beneficiaries, the type of policy, the structure of the policy, and the ability. We talked about some of these long-term care life insurance opportunities. Some people, may have bought a plan 10, 20, 30 years ago for family protection, but their needs have changed. Their kids are out of the house. They're successful. They don't really need to replace income for them anymore. Maybe we can take that policy and repurpose it to cover the long-term care need, for example. So maybe just a simple switch may not cost the person anything other than moving a policy and provide a real strong benefit going forward. So if you don't have coverage and you want to have a conversation about what might make sense for you, that's number one. If you do have coverage and you want to get a second opinion, should it be changed in some way? Can we repurpose it? That's number two, and we're here to do that as well. So again, I tend to say it once in a while, but working with financial advisors, build those assets, but make sure you protect those assets too.
Absolutely. I'd like to go back to Roman one more time. Roman, as someone who anchors these podcasts, The thing that really impresses me, I mean, today's discussion was insurance, but insurance is protecting your assets. What assets to invest in is growing your wealth. The different types of investments, the overall need to plan. Obviously, I know I am speaking to the choir, but could you say a little bit more about that? All these things are related.
Yeah, no, it's true, Bob. And I think to that point, right, you can't look at each particular asset class as sort of different, right? You have to see how they all ultimately fit into the overall plan. And I think Tim summed it up well. Is, we live in a world right now where there's uncertainty, forget about the political piece of it just for a minute, but my takeaway is that there's so much unknown, right? From an estate planning point of view, how taxes are going to move in the overall scenario, right? And I tell people is that you need to adjust accordingly based upon where we think the world is moving or evolving to. And having the right assets in the right buckets are as if not more important, right? Like having a Roth component, as Tim alluded to, as far as having a piece of insurance policy where you could borrow or take some money out tax-free, to us, that's a tremendous value, right? Because for us, we try to control that tax delta, right? You need people to understand and coordinate with the accountant as taxes change. Well, how are we going to minimize that required minimum distribution because of all of a sudden your tax situation is as such and it's going to put you in a higher tax bracket? Well, let's complement it with a life insurance policy, which will ultimately give us more flexibility. So again, it's, we do a lot of time around modeling, and there's no ideal or one solution, right? The one constant, as we all know, is it's going to keep changing, and it's going to change 5 years from now. And if the estate plans change, we have to adjust accordingly. And again, it's having these conversations, whether it's with Tim or others, to make sure we're doing things in a proper manner.
Well, I want to thank both of you. It's certainly been informative for me, and I'm sure our listeners. Folks, I'm Bob Marone for Westchester Talk Radio. You've been listening to yet another podcast with our friends from Hightower Westchester. We've just finished the topic of insurance. We were joined, of course, by Roman Ciosek. He's the managing partner and director of Hightower Westchester, and Tim Smith, the regional director from AIMCOR Insurance Group. Tim, it was a pleasure to meet you. Roman, as always, thank you very, very much for your time, gentlemen. Have a great day.
HighTower Westchester is a group of investment professionals registered with HighTower Securities, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. Hightower Westchester and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of Hightower Westchester and do not represent those of HighTower Advisors, LLC, or any of its affiliates. HighTower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.